Well, in just a few hours, we'll get the February jobs report, and it could give us clues to how high the Federal Reserve will raise those interest rates this year. Joining us now from the Wells Fargo trading floor in Charlotte, North Carolina, Mark Vitner, senior economist at the bank. Morning, Mark.
Good morning.
Well, is there any payrolls number that would actually frighten the Fed from doing a rate hike next week?
Well, it would have to be a dreadful number, somewhere under 100,000 net gain or anything less than that. That might give them some pause. I think they're pretty well set in their mind right now. It's not just this employment number. The jobs numbers have been looking better for some time. The unemployment rate's below 5%. They would like to see some better news on wages. There hasn't been much improvement in wages so far.
Donald Trump has promised that he wants to create, 25 million jobs over 10 years, which means we have to get at least 200,000 a month if you break it down. And yes, those jobs have to be better paying jobs. Do you think the Fed is going to look at all these details in the jobs report when they decide to raise interest rates? And how high do you think rates are going to go? At the end of the year, what are interest rates going to be?
Yeah, well, I certainly think that, this month we're going to be right off on target for President Trump. We'll probably add over 200,000 jobs. And I think that with the economy firming, with the unemployment rate down as low as it is, and if all the pieces fall into place and we see that the quality of jobs that are being added, being created are better, I think the Fed raises rates at least 3 times. I mean, that's what we have in our forecast. We think they raise rates next week. They do it again in June by 1/4 point, and then either in September or December. Now, one of the complications we have is that Janet Yellen's term expires in February, and the president's likely to appoint a replacement well before that. So the Fed would probably like to get some rate hikes done ahead of that.
How do you think the economy is doing overall when you take into account everything from housing, consumer spending, imports, exports, when you take into all account for all the things that we see each month, all the data? How do you think the economy is doing overall?
Well, there is no question that there's been a surge in optimism since the election. Part of that was getting the election behind us. Part of that was the hopes of tax cuts, rollback of regulation, increased infrastructure spending, and really just a better attitude. I mean, you think about how the president is interacting with business leaders. He's bringing them into the White House saying, what can we do to make this a better...
All right, we're feeling optimistic, but how's the economy?
Well, that's what's boosted things like the ISM index, and it's boosted the National Association of Home Builders Index and consumer confidence. And it's still a little early to see what that impact actually is on the economy. Now, one of the things that's very encouraging to me is you look at an index like the Philadelphia Fed survey, which surveys manufacturers in eastern Pennsylvania and southern New Jersey. And not only did it rise, it rose to the highest level since 1983 when the economy was growing 6% a year. So there's a lot of hope. So far, the data don't show all that much improvement because they're so backward looking.
We'll wait for more correlation between the two. Sounds good. Mark Vitner, senior economist, Wells Fargo. Thank you for joining us this morning. Thanks.
Good to be with you.